Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending July 29th, 2022. I am Justin Klein and I thank you for tuning in and remind you to subscribe and like this video as well as hit that bell. Now, this week I'm going to title the video Fed Pivot Confirmed. Maybe. And last week's title was Markets Start to Price in a Fed Pivot. So this is kind of a continuation of last week's narrative in the markets and kind of trends that we were seeing emerge last week and a clear breakout this week on the Fed announcement and the confirmation of a recession. You can talk about all you want about what is the definition of the recession. The definition of the recession has always been 2 negative quarters of negative real GDP growth. And we got that first and second quarter. Now, could this be revised? Maybe revised. Remember, there are revisions to these. The first quarter was revised as well. It was still negative, but we came in at negative 0.9% in the second quarter. And what's always interesting about this is that when the market kind of talks about it the most, or you see it in the media so much, the talking heads love to talk about it right when it is already priced in. And that's what basically happened here. You had the peak discussion about a recession, and that kind of marked the lows in the market. And the Fed started to acknowledge on their Fed rate hike, 75 basis points on Wednesday, that they're recognizing for the first time that the economy is slowing. They haven't really spoken about that this year, and that was the first time they kind of hinted at a potential Fed pivot. And that's why I said Fed pivot confirmed, maybe. And this is what I think is happening here is they're going to slow the pace of tightening. You've seen that in what the September meeting expectations are now. And I can actually pull that up here because I was just looking at this. And now it's pricing in basically a 70% chance of a 50 basis point hike. Here it is, 72% chance of a 50 basis point hike. Now that's up from 53 a week ago. And so this would be, current target is 225 to 250. So this would be a 50 basis point hike. But you see going out to November, there's actually a 68% chance that they'll go 25 basis points after that. So market's kind of pricing in 50 and then 25. And then you get into December, it's about a 50% chance to go a quarter again, but that's certainly not guaranteed. Remember, this needs to be over probably 80% for you to have a high confidence interval there. And this is at least close to that in November. So what you're seeing here is just a path, a moderation of the path forward. At least that's what the market is interpreting here. And when you have negative sentiment so extreme, you get a little catalyst like that, you get explosive upside in the market, so which we'll get to in a minute. But yeah, so here's the negative GDP growth. You had U.S. gross domestic purchase price index that did accelerate here, so that contributes. Remember, this is real GDP, so this is what the nominal GDP is minus this number. That's the real GDP. So the fact that this went up a little bit, that certainly is a drag on real GDP figures. You had some other figures that came out this week. This Kansas City Manufacturing Index that was negative in June, it turned back positive in July. That's a bit of a positive. Pending home sales, that continues to be the biggest headwind in the economy, or biggest drag, shall we say, in the economy, down about 20% year over year. Richmond Fed Manufacturing Index, that bounced back to flatline in July. Chicago PMI, that one dipped down a little bit more, not quite to shrinking. Remember, below 50 on the PMIs is shrinkage. We're at 52, so still some growth there. The initial unemployment claims, that 4-week average continues to tick up. Not a shock. The labor market is weakening a bit. Yet durable goods orders tick up slightly, so that was positive. And the PCE price index, that actually ticked up as well. So certainly a mixed bag here, but from the economic perspective, some accelerating, some parts getting worse, but for the most part, this is about what the Fed is doing. And so let's pivot over to the charts here, and we're going to start off with the TNX, which is the 10-year, and that has come in pretty dramatically here. We have almost 100 basis points decline, hit almost 3.5, and now we're approaching 2.5. We're only 14 basis points away from that. So we'll probably get there at some point over the next couple weeks, but we're probably in this trading range here between 2.5 and maybe 3.25. That's what I'm expecting, because the market doesn't seem ready to price in a strong possibility of rate cuts in the near future, and so this is likely to remain relatively range bound. Remember, these are still higher rates. You still have mortgage rates above 5%, and that's certainly going to be a drag on the market, and I think that'll stay there for a little while and kind of gyrate. You saw the dollar that weakened a bit, and kind of showing this bit of a MACD divergence where you did make a higher high, but not to the level that you saw the dollar really rally. And what's interesting here is it was less against the euro. Remember, the euro did get, the euro did get a little strength as the FXE, so it has been up over the past few weeks, but remember, there's a little more variability to what the ECB is going to do, and the European economy is much weaker than many markets because of the energy crisis they're having over there. Germany's economy, which is really the driving force of the European economy, they're having companies shut down production. BASF, a big petrochemical company over there, they have shut off some production because the costs are just simply too high. And so the fact that the euro is lagging things like the yen should not be a surprise. The yen certainly moved up. Now, the yen has been weaker, so certainly more move to have a snapback here. But remember, their policy is pretty static. They're keeping it at 25 basis points. They have still, inflation's ticked up a little bit, but they want that. They don't see 8-9% inflation like we have here. So the fact that the yen is getting some strength is certainly an indication that our policy rates here are likely to moderate. And that strength in the yen gave rise to a reversal in gold. Gold had a good week, and I expect this to be a medium-term low in gold. GDX also had a reversal, but what's most interesting is not just the GDX, but the GDXJ to the GDX. So when the junior miners, more money's flowing into the junior miners, that is risk on for the gold market. And the fact that this is kind of a tell that the reversal, that this recent breakdown was kind of fake, in the fact that there was more money flowing into the juniors versus the mature companies. When gold's going to fall off a cliff, the juniors are the first ones to sell. And so this is always a strong indication of what the trends are going to be in the gold market, and the fact that this is reversed tells me a lot. And then you can look at the GVZ, which is also the gold volatility index. That one ticked down, and remember, lower volatility means higher prices typically for most markets. And we'll talk a bit about the VIX as well. That also, I talked about this last week. You had a little dip lower low, and you have this really approaching these April-May lows. And we'll see, do we get a reaction here? I expect this to kind of grind lower for the next few weeks, and that likely means upside in the market. Doesn't mean we can't have a pullback for a week when we're overbought. And let's get into the SPX here. This is the S&P. So I talked about this 382 being the first resistance level, and we powered right through it. and the major one is going to be closer to this 4230 on the S&P, and I think we could get there. Or maybe early next week, and then give a pullback, or maybe we pull back and get there, later in August. Remember, this is the end of the month. Let's go to a monthly chart on the S&P. We didn't have quite a reversal here. That was going to be very interesting to see if we get a full reversal on the monthly chart. We did not get that. If we go to the weekly, pull that up here. We're also up into some resistance. So there's definitely a lot of resistance here on the longer term charts. So, a consolidation pullback would not be a shock to reach that next level of 4230 on the S&P. I'll bring up the NYSE. That's always instructive as well. We talked about that bounce off the 382 retrace and the 200 week moving average. And now we're back approaching I believe this is the 20 week moving average. The red is the 50-week moving average, and then the green right here is the 100-week moving average. So those are going to be overhead resistance once we get into those levels, and that's another 5% or so higher from here on the NYSE. And if you look at the S&P the Russell to the S&P, let's get this in there correctly. There we go. Did I not put it in correctly? I should have. There we go. That one, had a little weakness on Friday, but because you had strength in Amazon, you had strength in Apple, but this continues to consolidate and continues to be kind of risk on. Now, I want to highlight this, the IWF to the IWV, and you should not be shocked when the cost of capital goes down, growth is going to outperform. And so this was the last few days, especially, certainly was an indication of that. But underneath the surface, I want to bring up ARK to the IWM. So ARK has been drastically underperforming small caps for a while now. What's interesting here is ARK is not really getting an outperformance. So if you think that the Ponzi stocks and the companies that don't earn any money and just they're there to increase sales and sell more stock, and their business is probably not very economical. That's what most of the companies within the ARK funds are consist of. You think those stocks are getting some sort of great revival? I think you're sadly mistaken. Are they getting a bit of a rally? Your Pelotons of the world, absolutely. Zooms of the world, sure. But these are not strong bounces, okay? These are counter trend rallies within a very, very strong bull market. Now, what did get good rallies this week were, we're still in the midst of earnings. Amazon had good earnings. Apple had good earnings. Google had a bit of a rally on their earnings. But Meta, that one continues to struggle, and I think that of the FANG names absolutely is going to remain the weakest. Netflix had a bit of a rally, but also, today was down on an up day, a very strong up day. So even in the tech space, the ones that are cash flow positive, the ones that have reasonable valuations are and steady businesses that aren't tied to the ad market, like a Google and a Meta, those are the ones that are going to hold up better. Anything that's tied to the ad market, that's tied to, that doesn't produce a whole lot of profit or positive cash flow, those are going to continue to struggle. Even if you get a bit of a pullback in the 10-year, rates are still high enough to where those companies are going to struggle. What was interesting is even though growth outperformed, you still had huge moves in the materials sector. So the fact that we're in a quote unquote in a technical recession, I do think it's a very minor recession. A lot of people think of recession, they think '08. No, that's not every recession is '08. It's usually more mild than that, and that's this is currently one of those. But what you're seeing here is materials getting a nice rebound. You have the XLE getting a nice rebound, and most importantly, industrials. Look at this move on industrials in just the span of, what is 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trading days, we've gone from 84 all the way to 95. So you're talking about 12, 13% rally in industrials in just a short period of time. And this just shows you that, the overall economy remains relatively fine. And they're getting the biggest boost. So, near term, I don't see, I see there's a lot of vol control funds and different types of systematic trading vehicles that have billions and billions of dollars that were taking down exposure over the last 6 months. And now that they hit kind of peak hawkishness and high levels of cash, etc., when you get vol, like we talked about the VIX going down, and you see volatility going down, they start to add back on risk just indiscriminately and buying equities. And that's what you've seen over the past few days. So, we're certainly into resistance. Like I said, you have this we call it 3-bar surge into resistance. So into the 100-day moving average. A pullback from here should not be a surprise to anybody. But overall, the fact that, this is a nice, solid, strong, good volume, mini breakout. It's not breakout to, probably new highs. I think that's still unlikely. But see this downtrend line in the S&P? It looks to me like this is destiny here, in my mind, that we're gonna grind, consolidate, pull back, whatever it's going to look like, and probably make another move into that level. Maybe it's into the 50% retrace. Maybe we get all the way to the 6.8%, all the way up at 43.68 on the S&P. That's certainly a possibility. That was a breakdown area as well. You see that here. So those are kind of those next few levels that I'm targeting for to take down exposure a little bit. If you get up there, you definitely want to take some profits. Definitely want to trim some positions. But overall, short to medium term, I think you have to be a bit bullish on the market. So that's where we're at now. The Fed has hinted at a pivot, slowdown and tightening, and the market certainly like that. So that's where we're at heading into the month of August. Appreciate you all tuning in to this channel, and a reminder that the contents of this video are provided for educational purposes only. It should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and should not be construed. The views are my own and do not represent those of KPP Financial and those associated. I thank you all and have a wonderful weekend.